Hey guys, welcome back. So today's Thursday. Hope you're having a great day today. There's an article I wanted to cover from Seeking Alpha. They did an article on Bitfarms, Mara and Riot comparison, and they have an interesting way of evaluating these companies. So we'll get into that article as well. Then we also have a new miner going public on NASDAQ here. So we'll cover that really quick as well at the end. But first, just wanted to share with you guys something. So I tweeted just a little bit ago, which mining company should I do a deep dive video on next? So go to my Twitter page, and then you guys can vote on it, and then this will let me know as far as which one to do. I also posted it on my Patreon page yesterday for patrons to vote on as well. So you guys will always get a little bit faster access on Patreon there. But I had one more mining company in there, Bit Mining Limited. So if you want to have that one included as well, and you can vote on it on Twitter, just put it down in the comments or tweet about it, and I'll try to keep track of it as well. But so far we got one vote for Bit Digital for my Patreon, so thank you for doing that. And then we also have right now one vote through Twitter for Core Scientific, so we'll get into that as well. So let's get into the main article here. So we got Seeking Alpha did an article on Riot Blockchain, the more overvalued and inefficient mining company compared to peers. So here's what they're saying. Based on 2021 Q1 QR, Riot was the most inefficient mining company where its total mining cost is 50% higher than that of Mara and Bitfarm. They revisited Riot's 2021 Q2 QR and found that Riot's total mining cost remains consistently high, coming in at $34,475 per BTC, or a 3% increase quarter over quarter. So given their assumptions in Riot's 22 forecast, our valuation framework values Riot at $861 million, which they're saying is 65% overvalued, Bitfarm at $850 million, which they're saying is 30% overvalued, and Mara's is $2.265 billion, which they're saying right now is 36% overvalued. So obviously the least one here they're seeing is overvalued is Bitfarms. So 65% overvalued may seem exaggerated. One supporting evidence is Bitcoin's rebound from July's low of 30,000 has led to the recovery of Bitfarm and Mara, but not Riot. So let's continue on here. Some interesting stuff. They go into why it matters. Here we go. So Riot is expected to have 7.7 exahash in mining capacity, similar to Bitfarm's 8 exahash. However, Riot is valued at 2.56 more than Bitfarm. On the other hand, Mara's mining capacity of 13.3 exahash is expected to be almost as large as Riot and Bitfarm combined. And that is true. That is why we're probably seeing why Mara is right now valued higher than both of those companies, right? I can't remember if it's valued exactly more than combined, but I know it's valued more right now. It's expected to be almost as large as Riot and Bitfarms combined. However, Riot is valued similarly to Mara, despite having only half of Mara's 22 mining capacity, and that is true. So I thought that was kind of interesting as well when you look at it that way. So according to Riot's 2021 Q2 QR, Riot incurred $23.271 million in costs, excluding impairments and acquisition costs, to mine 675 bitcoins. This translates to a total mining cost of $34,475 per BTC, or a 7.7 increase quarter over quarter. This shows that Riot's mining cost isn't drastically lower than Bitfarm or Mara's, referring to Table 2. We'll take a look at the tables here shortly. And Bitfarm's total mining cost per BTC stands at $33,150, while Mara stands at only $22,600, which is really low, which is pretty good. Therefore, Riot's high valuation isn't contributed to low mining costs. So here's the table here, mining cost summary table for 2021 Q1. So we got Riot mined 491, Mara 196, Bitfarms 598. So yeah, I mean Bitfarms is mining more than, almost more than Riot and Mara combined, but its market cap is obviously lower. So total cost for mining it is $15.8 million for Riot, $3.8 million for Mara, and $12 million for Bitfarms. So total cost per BTC, you got $32K for Riot, $19K for Mara, $20K for Bitfarms. And then mining cost summary table for 2021 Q2. So this is what they mined in Q2 now. So Riot 675, Mara 654, Bitfarms 759. So obviously Mara is gaining on the other guys, getting close to where they are, basically because of all the mining that they're installing. So their total cost was for Riot $23.271 million, Mara was $14.8, and Bitfarms was at $25 million. Total cost per BTC was $34.475 for Riot, $22.6 for Mara, and $33 for Bitfarms. Their BTC holdings obviously now is Riot has 3,534. Mara has 7,000. Mara, I believe, bought like 4,000 Bitcoins around there earlier this year. That's why they're up so high. And Bitfarm is at 2,312. So something interesting there. And then this is what they're using as far as their costs. So cost of revenues, cryptocurrency mining exclusive of depreciation and amortization shown below. Cost of revenues, data centers, so on. They're also using selling and general administrative and depreciation and amortization for that. And they're also using stock-based compensation as the cost to mine a Bitcoin. Next, we continue on here. So here's a chart of the performance since, looks like July, of Bitcoin, Bitfarms, Marathon, and Riot. And we can see both Marathon and Bitfarms have increased in value while Riot has gone down in price. So that's kind of why they're thinking it's overvalued. Mining capacity is a function of the company's hash rate and network hash rate. Riot expects to have 7.7 exahash in capacity by the end of 2022, while we expect that Bitcoin network hash rate will reach 324 exahash by the end of 2022 based on CAGR of 130%, which I would agree. I mean, you're seeing a lot of the miners getting installed. They're getting, hundreds of thousands of miners getting installed. That's only going to increase the hash rate, so I agree with that. This implies that Riot is expected to mine 7,771 Bitcoins annually by the end of 2022. Note that it is beneficial for Riot if the network hash rate doesn't grow as much. Correct, right? Lower the hash rate, lower the difficulty, you can mine more. So here's where it gets interesting. They're saying that they've previously used a price-to-earnings ratio, PE of 20, which is what I use for my analysis, but found that PE of 5 is more suitable. So I thought this was interesting. So obviously PE represents how long years it takes for investors to break even on investment. PE of 20 implies that a business owner's investors have to wait 20 years to earn back the investment. The average lifespan of a mining rig is only 5 years. Hence, we should expect the company to at least earn us our investment back in 5 years. Hence, a PE of 5 is more suitable. Okay, I can see that. I can see why they're thinking that. Moreover, a PE of 5 offers investors with sufficient margin of safety considering the operational business risks of mining companies and the volatility of cryptos. Okay, that's all true as well. But I think a lot of investors don't look at it that way. They look at it typically with a price to earnings of 20 multiple, and that's how these stocks are getting priced out at least in my opinion. Ideally, you would have it priced out to be a PE of 5 or maybe even 7. So that is kind of interesting that they're using that, but obviously gives them a lot lower price targets than you would normally with PE 20. So based on the premise presented above, Riot's intrinsic value should be 865 million, which equals 51,000, which is the current Bitcoin price, minus the 33,475 for their cost to mine a Bitcoin, times the 7,771 Bitcoins that they should have or should be mining at the end of 2022, times the 5 price to earnings multiple, plus the 3,534 that they currently have, times the 51,000 current Bitcoin price. That's how they end up with the 861 million valuation. This implies to them that Riot is currently 65% overvalued based on where the valuation is right now. So for comparison, Bitfarm and Mara have intrinsic value of 850 million, 13% overvalued, and 2.265 billion, 36% overvalued, respectively. This is why Bitfarms remains their favorite Bitcoin mining company, even though its expansion plan has deviated from its green and renewable energy operation. You can read more about it there. So 65% overvalued may seem exaggerated at first glance. However, if you consider that Riot will have the same mining capacity as Bitfarms and similar total mining costs, they should be valued similar because their earnings capacity are similar. Correct. Another evidence for this suggests the overvaluation in Riot's price movement represents in the previous section. Even though Bitcoin has rebounded from July low, Riot hasn't, Mara and Bitfarms has. So something to be mindful of there. So in conclusion, there's an important caveat when interpreting the valuation provided by our evaluation framework. Our framework heavily emphasizes Bitcoin's current price. As mentioned earlier, we suggest amending the benchmark Bitcoin price to reflect the optimism and potential of the crypto industry. For instance, we very conservatively estimate Bitcoin to reach 100,000 by 2025. That's very conservative. I would say by 2025, Bitcoin might be closer to 500,000. But that's just where they're looking at it. So based on the halving cycle pattern, in this case, Riot's intrinsic value would be 2.9 billion, 90% upside. In comparison, Bitfarm and Mara would be valued at 2.9 billion, 3% upside, and 5.9 billion, 68% upside, respectively. Investing in Bitcoin directly would double your investment. That's true. I mean, obviously, a lot of people are scared to invest in Bitcoin directly. They're afraid of losing their keys or wallets, whatever, and that's why they invest in mining companies. Regardless of the interpretation, Riot is shown to be overvalued compared to Bitcoin and Mara. I actually thought Mara was more overvalued than Riot based on my calculations, but this is just another way of looking at it there. All right, so let me know what you guys think of that story there. As far as what do you think of it? Do you think Riot is the one that's truly overvalued, or is Mara more? I think Mara is just right now, based on what they have mining, it looks to me, but obviously future mining will increase obviously the revenue as well, so that's why they might be valued as high as they are. Okay, so let's get into another story here on a miner that's going public. So Bitcoin miner Stronghold will list almost 6 million shares in its 100 million IPO. The firm uses sustainable energy sources by converting waste coal into power to mine Bitcoin. So I got to do a little bit more research on this. I'm a little confused by how this is green energy. U.S. Bitcoin mining company Stronghold Digital Mining will list almost 6 million shares in an initial public offering on NASDAQ. Stronghold plans to list 5.8 million Class A stock shares priced between $16 and $18 under the ticker SDIG. So obviously something to keep an eye on if you're investing in the mining companies. Taking the average proposed offering price puts the IPO at around 100 million. So we knew this. Kennardell, Pennsylvania-based firm, first filed with the Securities and Exchange Commission for NASDAQ IPO in July. It will fund almost 900% expansion in the capacity in the coming year. The final prospectus has already been filed with the SEC, but it has yet to become effective. Stronghold plans to become the first North American crypto mining company to go public through an actual IPO. According to NASDAQ, this is different from the now popular direct listing and special purpose acquisition companies SPAC avenues. Stronghold intends to grant underwriters or intermediaries that help the firm prepare for the offering a 30-day option to purchase more, 880-some thousand, in addition to the 5.8 million offering. Let's see what else we have here. Stronghold describes itself as an emerging growth company, which currently operates approximately 3,000 crypto miners with a hash rate capacity of 185 petahash per second. So we can always do the calculation on this and figure this out on what they're actually having right now. Probably the S17s or T17s, S19 miners. I don't think that's the S19. Those would be closer to 300. So those are the right around 65, 50 tera, not terahash. Mega hash miners. It stated that it has entered into agreements with 3 suppliers to provide an additional 26,150 miners with a total hash rate capacity of 2.5 exahash. So those would be more likely the N miners, S19J Pros, which are over 100,000 mega hash. Delivery of 72% of them has been scheduled for delivery this year. So that's great. So you're looking at close to 19,000 of those, with the remainder being delivered in 22. Stronghold intends to acquire even more hardware with the proceeds of the IPO, as an additional 55,800 miners have been planned. So they're looking to have approximately, 82,000 miners. So that puts them pretty close to where Riot is and Bitfarms. The firm owns and operates the Scrub Grass plant in Pennsylvania, which has been recognized as an alternative energy source since it converts waste coal into energy. The prospectus stated, "We are committed to generating our energy and maintaining our assets sustainably, and we believe that we are one of the first vertically integrated crypto asset mining companies with a focus on environmentally beneficial operations." So that is obviously interesting. We'll have to follow this more. And then Michael Saylor obviously tweeted about the IPO coming. So he tweeted, "Bitcoin grows stronger each time a miner goes public." So if we look at their facility here, so this is their facility here. So this is kind of interesting that they're going to be basically mining at their operations here, which is a plant, electrical plant. It has generating capacity of 880 megawatts. And then they have Panther Creek plant, executed building purchase agreement not yet closed. So they're generating so they got one doing 85 megawatts, and then they got another one doing 80 megawatts. So they got 2 plants that could be doing this for them. So this might give them an actual little leg up, because they do have their own plants that they're mining electricity from. Depending on the costs on that, if the costs are really, really low, they could be one of the best performing mining companies. But we'll have to see, obviously, as far as what their costs are for mining it and things like that. So something to keep an eye out. Just wanted to bring it up to you guys. So that's it. That's all I got for you guys. A couple interesting articles. And then let's see if we have anything updates here. We still don't have any updates on more than the core. So if you guys want to vote on that, go ahead and vote on that as well. And then you can always help support me on Patreon if you like. But that's all I got for you guys. You know, interesting stories obviously about Mara, Bitfarms, and Riot, and the new story about Stronghold going public on NASDAQ. So let me know what you guys think. If you guys plan on buying into Stronghold or not in the coming days, weeks, months, whenever that goes actually public. Have a great day, guys. I'll see you in the next one. Bye.